So welcome to Stan Weinstein video series, and this is the part one, video number one for 6 video series, and these are the 6 videos we are going to cover. So today's video is what we will cover everything about stage analysis written in the book. But there is one thing: you might have read the book yourself, you might have watched a lot of other videos on the YouTube, but there are so many secrets which are not explicitly mentioned in the book, which are probably not even written in the book. You have to take those secrets out from the book. And that is what I've done it, and I'll be sharing with you in the series. So even if you have read it, not read it, familiar or not familiar, this is a very important series if you want to make it big in the stock markets. So let's begin. And the best thing about this series is everything will be done here on the drawing board. Every drawing, every concept will be explained through the drawings and a lot of other things. So very interesting, very comprehensive series this is going to be. And I hope it will be fun and enjoyable for you. So let's start with today's V1, video number one, and we'll cover everything of stage analysis. So now see, there is one big problem in this book, which is this diagram that you see. Exactly, you would now question, you would now laugh that this is what the entire book is about. This is what the author explains, and you are saying that this is the problem. Well, hear me out. Yes, this is the exact problem why the book doesn't come as efficient as it promises to be, or you are not able to get the best of it, because the diagram itself is a big problem. And this is what we are going to decode through the series. Especially in this diagram, if you don't understand it, don't worry. We'll study this in detail. But the thing you see here is 30-week moving average, black line, and stage 1, 2, 3, 4 are drawing here. This is the biggest problem. So if you see, I'll give you a lot of secrets throughout this video. So one such secret is that your stage analysis, which we will now see, is something, a relative concept. It's not just a concept, it's a relative concept. Now, I've given you all the secrets compressed in these two words. All the secrets that are there in the trading world are hidden in these two words called as relative concept, which we will decode very well as we go ahead. But this is something you need to have in mind and write it down. So he opens the book and he says that one glance is worth 1,000 earnings forecast. So what he did, he divided the stock charts in such a way that by having one look on the chart, you can tell exactly where the stock is, exactly what you need to do right now, and what you not need to do. So what he said is that a lot of people spend a lot of time in forecasting the earnings of the stock, to decide whether to book profits early, to hold it for a longer period of time, or basically how to trade it. And they see a lot of fundamentals and earnings, and even doing those kind of things, they are still not able to get the best. So what's the secret here? Well, what Stan did is he divided the market, the chart, in 4 stages. And he gave the following 4 names to each of the stage. The first is called as stage 1, also known as the basing area. Stage 2 is called as the advancing stage. Stage 3 is called as the top area. Stage 4 is called as the declining stage, right? This is the theory. But let's see it on the whiteboard and let's see what he's trying to tell us. So see, if you open up any chart of the market, we'll see the real charts also in the series. But for now, let's draw a diagram here and let me just make you understand. If you see any chart of any stock, Nifty, Bank Nifty, whatever, this is how it would look like, right? This is how the stock moves up or down anyways. And then this is what happens. You buy here and boom, it goes down and keeps going down and more down. Now you think I'll short, right? It goes a little down and boom, it does this and this happens. So this is how a very basic chart looks like. What Stan did is He said, okay, fine, whatever is happening, it's fine. Let me divide the chart in 4 areas. This was the area number 1, called as the stage 1, which we also know as a base area. Okay. Then he said that there is one more phase in the market called as number 2, and stage 2, which is something known as when a advancing phase of the market, when the market is going up. Then he said, okay, fine, there is one more area coming up here, and he named it stage 3, also called as the top area. Then the last stage is stage 4, called as the decline phase, when the market is going down. In this entire series, this is the diagram we will be working upon, but not how the book tells you to. I'll tell you how to do it in my way. So see, what he said is that before the stock market, the stock climbs up, there is always a base area before it. It could be big, it could be small. We'll go into the details. But there is a base area, after which there is an advance area. After the advance area, there is a top area. That is the area from where beyond the prices are not able to push themselves up. Then comes a decline phase where the prices keep going down. And that is called as the stage 4 or the decline phase. This is how he divided stock market or any chart of any instrument in the manner. Now, here your job is to think a little bit that if you want to buy a stock, where should you buy? Here or somewhere here? Obviously somewhere here. And when you want to book the profits, you would want to book the profits here. And if you are a shorter, you would like to sell, this is where you would like to go short, and this is where you will cover your short. As a buyer or a seller, you have to avoid this area. Same thing goes here. But the question comes is, how do I know the given is a base area, not a top area? This could have turned out to be a base area as well. This advanced area could have been a fake breakout and again come back down. So there are a lot of things not explicitly covered. And that is where my job comes in, to make you explain this. So now let's see some of the details of stage 1. Right? Let me take everything off the slide. By the way, the slide is available for you to download in the description below. So let's take use of the slides here. Let's paste everything here so that it's better visible to you and we can just have better understanding of everything. There is more. I'll get all the written work here and then we will start. Yeah, so now we are done and I hope this is very much visible to you. Yeah. So this is how it looks. And these are the important points regarding the base 1 area, stage 1, that is also called as, compiled from the book for you. So we'll go and read it in depth and we'll also draw some diagrams here. So see, what I'll do is I'll underline some words that you need to take a note of. Okay. So see, what happens in the basing area is, here it is written in the book, it loses downside. From here, what you could think is that means before the basing, there would be some kind of a down move. This is what the book is saying, downside momentum is lost. And then it says that there is a sideways trend. Okay. So the word here written is trend. And just after it, written sideways. This is wrong. Because trend and sideways cannot go both ways. You can just say the price starts to go sideways. Buyers and sellers are starting to move into equilibrium. This is a very important word. We'll see it. Then comes about the volume. He says that the volume will expand late in the stage 1, even though prices remain little unchanged. Okay, this is what he has talked about. But there is a lot of things that need to be discovered behind this. Then there is a talk about moving average, which you have to omit for this series, as in for this video, because the last video that is of indicators, that is where we will cover in depth. Then he says that during this stage, that is the stage 1, there will be a lot of swings, several swings between support and resistance. This is the most important point here. Basing action can go on for months or years. अब आप बताओ, if you plan your entry in basing, what if the stock keeps doing basing for 6 years? What will you do? Right? So these are some places where, some things are not told, but I'll talk about that. And see, this is the point where many market players get itchy to move in and catch the bottom price. But it doesn't do much good to buyers yet. Because even if you catch the exact low, your money could be tied up for a long time with little movement. And time is money. This is very important. That is why you have to time the markets if you want to make consistent profits from the markets. And what happens is premature investors, the word he has used here is investors. Now I'll talk something. When you read the book and when you see the word investors, what happens is when you read and go ahead, you develop a profile or a habit that you are an investor. But what I'm saying is everything that he has talked about is equally applicable for a trader as well. Okay. So what happens is a trader or investor gets impatient in the stage when that the stock is being very volatile. And he gets frustrated and he sells right before the big move starts. So now let me draw a diagram here and show you that what exactly happens, in such kind of a move. So see, how that will look like is this. How does a stage 1 look like? This is how it looks like. So according to the book, there will be a downside momentum. What will happen is this. This is how the stock will behave. So if you read here, lose the downside momentum and start to trend sideways. This is the first point. So what happens is, if you see here, what was happening? The fall was big, consolidation was small. Fall came, not as big, consolidation was also small. Then another fall came. If you see and notice, all the falls are shorter than compared to the one before. That means loss of momentum on the downside. And then he says that the sideways action will begin, not trend action, sideways action. Then you will see that your stock will form similar lows. And suddenly it will go for long consolidation and there will be these big ups. This is your clue that now probable basing can happen. And stock will do something like this. Now what will happen is a person will think, okay, now we are starting to break out, and he will buy. Then what will stock do? Stock will do this. It will go up a little and boom, down. And he will be like, oh, what happened? I thought we were going up. I thought the basing area stage 1 was completed. Then what will happen? This. Now this is the action your stock can do for months, for weeks, or even for what? Years. As a trader investor, if you put big money here, there is a lot of opportunity cost associated with it. You might be losing very good opportunities in the market. So this is how a typical basing area looks like. So what are the key takeaways? What are the secrets here? The first secret, the first important point is what? Volatility. That the stock in basing area or stage 1 area will be very volatile between the ranges. You have to understand this. The second secret is a lot of choppiness, up down or sideways action. As a trader or as an investor, you have to avoid trading it. See what word I'm using it. I'm saying trading. I'm not using the word buying or selling. Trading means buying and selling within this area is something you must avoid. I'm not using the word buy. I'm not using the word sell. And that is where the secret is. It's your job to decode it a little bit and discuss with me in the comment section. That is where I can give you more secrets. But understand, you don't have to trade here. You might buy or you might sell, build your positions, but you should not trade here. This is how exactly your stage 1, the basing looks like, right? And this is what he talks about here on. Then what will happen is, there'll come a point in time that a stock will do this, and boom, a great up move will come. Now he has talked about volumes here, if you see, but volumes is a kind of an indicator. So about volumes, we will study when we talk in the video 6 about indicators like moving average and the volumes. That is where I'll discuss this aspect. But from the stage 1 basing area, what you have to take away is these 3 points, nothing else. Don't even remember stage 1 and basing. But ye cheeze aap yahan pe yaad rakhna. And the third point is a secret here, which is not in the book. Right? So I hope you take away this. Now let's move on to something called as stage 2, advancing phase. And this is very important because this is where all the action happens. So let's take all the data from here to our whiteboard and paste it and read about it. That's what he's trying to say. There is one more slide. I'll take that also. And here the term something called as pullback will be introduced, which we will talk about later on in depth. Okay. So we have our data for advancing phase on our screen. Great. So we can start studying it. Let's see what he's talking about here. The ideal time. See the word. The ideal time. Usage of word ideal time means you have to time the markets. Even Stan Weinstein is saying that, right? So you are not someone to deny this fact that in order to make big in the markets, you have to time it. There is no other way. So see, then he says, okay, and he talks about, he says when the stock is finally, very important word. Because when he says finally moving out, that means fake outs bhi hote hain, fade out bhi hote hain, whatever the term you like to use. So we'll decode this also. Into more dynamic stage. Now this is important. What do you mean by dynamic stage? How do I tell it's a dynamic stage or not? See what he has written in the next. Again, he is using moving average, but for now, your focus should be on price action. Absolutely. So no moving average as of now. He says breakout above the top of the resistance zone, impressive volumes. He says this is the start of advancing uptrend phase. But I'll show you on the live chart where this fails and you will also fail. And we'll talk about it, why it happens. What he has written then, before the really dynamic part of the advance gets rolling, be aware there is usually an initial rally followed by at least one pullback. Very important. The word called as, this word initial here and one pullback is very important. And he also says that the pullback dip, he's using the word dip, but it's the same thing, close to the breakout point, which is a good second chance. Interesting. He says second chance to do low risk buying. Very important words. So he's saying that your first buy is where? Did he talk about it? He directly talked about a second chance to do low risk buying. He never talked about the first buying. First buying is something you have to figure out. How will you do that? I'll explain. And then he says, I'll get this thing a little here. Yeah. Then what he's saying is, the less it pullbacks, very important, more strength it is actually shown. So now see, there is one problem here. You can never know how much pullback will happen before up move has begun. What he's trying to say is, लेट्स से कि आपका ये ब्रेकआउट हुआ, ही सेइंग एक पुल बैक होगा इस तरीके का, एक पुल बैक हो सकता है इस तरीके का, देन एन अप मूव स्टार्ट्स, एक पुल बैक हो सकता है इस तरीके का, ठीक है। अब आप इन तीनों में से नंबर 1, नंबर 2 एंड नंबर 3 में से मुझे ये चीज़ बताइए विच इज़ बेटर पुल बैक। आप बोलेंगे नंबर 3 इज पुल बैक बेटर। ओके, व्हाई आर यू एबल टू से दैट? यू आर एबल टू से दैट बिकॉज दिस मूव हैपेंड, अदरवाइज व्हाट इफ दिस वेंट ऑन टू गो डाउन, तो फिर 1 और 3 सेम हो जाते। तो दिस word here, the less it pullbacks, the more strength it is actually showing, is actually a problematic for a beginner or someone who reads the business. Because you never know. You can only know when a big move has already come after the pullback. Then you can watch this chart and say that, okay, the pullback was shallow, so the strength is there, but sir, the move has already gone. The move that you wanted to trade, right? What will happen? You will think that, okay, pullback is getting over. Stock will do this and then boom, down. You will think, array, Stan Weinstein said this, what has happened, right? So these are the secrets you will not find in the book. We will discuss. Then he says that lows on corrections are also progressively higher. This is important. Now this is very important. Don't expect the stock to be one-way street no matter how bullish and powerful the pattern is. That simply means अगर स्टॉक में ब्रेकआउट हुआ है एंड दिस इज हैपनिंग, तो कुछ इस तरीके से स्टॉक मूव करेगा। पीपल थिंक कुछ इस तरीके से उनका स्टॉक मूव करे, बट दैट डजंट हैपन। एंड ही ऑल्सो सेज दैट प्रोग्रेसिवली हायर लोज बनेंगे। दैट मीन्स दिस इज अ लो, दिस इज अनदर लो एंड दिस इज अनदर लो, एंड यू विल हैव टू एंड्योर दिस। दिस इज वॉट ही इज सेइंग, यू हैव टू डू इट। Stock market will do whatever necessary to keep the majority from making money. So markets के अंदर inherent ये चीज़ है कि they don't want you to make big money. तभी आपने देखा होगा, आप एंटर करते हो, स्टॉप लॉस हिट होता है, स्टॉक ऊपर जाता है, बिकॉज ये इनहेरेंट फीचर है अकॉर्डिंग टू स्टैन वाइनस्टीन, विच यू नीड टू अंडरस्टैंड। एंड हेंस ही सेज 2 steps फॉरवर्ड 1 step बैक, विच इज हैपनिंग हियर। सो वी नीड टू अंडरस्टैंड दिस। नाउ लेट्स सी in more detail about what he's saying. So हमने एक चीज़ देख ली थी, what we saw, stage 1 basing area कुछ इस तरीके का होता है। Then what he's saying is कि कुछ इस तरीके का बेसिंग एरिया हम छोटा सा बना लेते हैं जस्ट, and then what he says is a breakout happens, impressive breakout on impressive volumes, which is also called as, आपने ध्यान नहीं दिया होगा बुक में, I'm pretty sure, this is also called as what? Initial rally. That is the first rally. First rally is very important. Then he says कि हम अगर देखें तो ब्रेकआउट रेंज हमारी कुछ ये है, राइट? यहाँ से हमने ब्रेकआउट किया जोन से, उन्होंने बोला उसके बाद आपका स्टॉक एक पुल बैक करेगा, ठीक है? इफ यू रीड इट, सी व्हाट ही सेज। एक इंपॉर्टेंट पॉइंट लेके आता हूँ यहाँ से। 1 पुल बैक brings close to breakout point. यहाँ एक चीज़ उन्होंने बोली कि जहाँ से ब्रेकआउट हुआ है ऑलमोस्ट वहाँ तक is the pullback coming. But then he also says the less it pullbacks, the more strength it is actually showing. So what will happen is with you is you will see stock is doing this. Now you will say, अच्छा, I'll wait for the stock to come in this zone because that is what the book has told me. This is a low risk opportunity. This is where the stock can come. But he also says that the pullback, if it is shallow, if it is not deep, then the strength is there. So now question is, if the pullback is not shallow, then it will not go till here. If it doesn't go here, there is no risk, low risk buying opportunity for you. If you buy here, and this is what the stock does, what will you do? Your stop loss will get hit. By the point this region is arrived, you will be so scared that you will not buy. ये चीज़ है समझनी, that how do I know the pullback will be shallow or the stock will do this? How do I know? This is what Stan Weinstein did not tell you. How do I know? He talks a little bit about the moving averages, but that is again not enough. I'll show you. But let's see what he said. What he said was, let's say एक ideal case scenario हम बना लेते हैं कि pullback तक आप करते हो, ठीक है? दिस इज वेर यू पुल बैक, सो आई ड्रॉ द लाइन, थोड़ा एलोंगेट कर दे, मान लेते हैं कि ठीक है यहाँ तक आपने पुल बैक किया, वहाँ पे भी एक प्रॉब्लम है, लेट्स से यहाँ पे अब आप बोलेंगे आई विल बाय हियर एंड देन स्टॉक विल डू दिस, आपको लगेगा अब मूव आ चुका है, व्हाट इफ दिस हैपेंस एंड दिस हैपेंस इन द मार्केट, आई कैन गारंटी यहाँ पे आपको लग रहा था इनिशियल रैली है, आपको लग रहा था स्टेज नंबर 2 है, आप तो फिर से स्टेज 1 में आ गए, एंड स्टेज 1 इज़ वेरी वुडंट वांट टू बी, बहुत क्वेश्चन है, बट अगेन अकॉर्डिंग टू हिम, अकॉर्डिंग टू द आइडियल सिनेरियो, व्हाट ही सेज इज और व्हाट हैपेंस इन द मार्केट्स इज कि इस तरीके से पुल बैक आएगा, यहाँ बाय करेंगे एंड देन दिस इज हाउ इट विल मूव लाइक, एंड दिस इज व्हाट ही सेज. सो ही सेज यहाँ पे आपकी सेकेंड बाय लो रिस्क. Why is it a low risk? Do you understand why it is a low risk? There is a big lesson behind this, and this is your homework. I'll explain this in the next video number 2 of this series, but your job is to think a little bit about it and put it in the comment sections that why this area exactly is called as a low risk. Why? What could be the reason to say it is a low risk opportunity specifically? So according to Stan Weinstein, this is the second buy. I'll give you where the first buy is. He says the first buy should come at the breakout. अपने orders आप लगा के रखिए. That is where you have to buy your first tranche. Oh, and then what happens is you ride this entire rally after the initial rally. That means the maximum profit that you can get from is after the initial rally has happened, not in the initial rally. So initial rally is your point to focus on the stock and not cry that you missed, which a lot of people do. When the initial rally happens, that is the point where the stock is coming in your focus and you have to be ready to pounce when the second buy opportunity comes. Even if you miss to buy here, make this second buy your first buy and ride the entire trend. This is what Stan Weinstein meant by it. Not written in the book, not written anywhere on the internet. And this is how then, the stock, what will keep doing is, it will create resistances and it will give you these buying opportunities for you to trade these kind of up moves. But everything happens after the initial rally. That is important. So this is what he had to talk about in the advanced area. And that is what happens in the advanced area. Now let's say what is the top area. और ये इंटरेस्टिंग है बिकॉज इट इज़ अ वेरी डिटेल्ड, बिकॉज सी मार्केट्स में एंट्री बाइंग थोड़ी सी मैकेनिकल हो सकती है, आपने कुछ कंडीशंस बना लिए आप एंटर कर लेते हैं, लेकिन जो सेल होगा वो बहुत डिफिकल्ट होता है. एंड दैट इज़ व्हाट वी विल discuss now from this slide onwards. So let's take a fresh slide, get all the data here. I'll make it a little big and then we will be ready to understand कि अब ये selling के लिए क्या बोलने वाले हमको. So yeah, this is the data we have about the selling area or the top area. Interesting it. So your focus should be here. See what he talked about. Upward advance loses momentum. Sideways. Now what is happening is buyers and sellers once again equal in strength. अब यह once again use किया, इसका मतलब ये चीज़ पहले भी कही हुई है, याद है? Stage 1. In stage 2, what he's talking about, buyers were stronger. ठीक. Advance is ending. यहाँ प्रॉब्लम है बुक में. I'll explain. Stock equilibrium पे, ये हमने पहले भी पढ़ा हुआ है. And then he finally writes, mirror image of stage 1 starts to take shape. And this is a big problem in the book itself. See, if stage 3 is mirror image of stage 1, then what is the differentiating factor is my question. nowhere written. Think about it. He says volume is usually heavy in stage 3, right? This is what he writes here. And if you see, this is what he told us in this stage 1. Moves are choppy and sharp. See what I wrote here. And see the diagram I made. For what? Stage 1. But he's saying the same thing for stage 3 as well. Traders, the word, get heck out with their profits. Investors, however, have more leeway. He suggests that the investors take profits on only half. Then he talks about on the upside that a breakout can also happen on the upside, beginning yet another stage 2 up leg. So what exactly is a stage 3? Is it a stage 3 or is it 1 and 3 or 1 in disguise? What is it exactly? See? And see, there is a note, very important note. No matter how powerful the fundamentals, how convincing the story, you are never going to buy a stock in this stage because the risk-reward ratio, again, he's talking about risk-reward. He talked it about stage 2. Stage 2 में this, he talked for the first time against you. This is what he talks about. But then he also talks about this, stage 2 beginning yet again. So what he's trying to say, I'll draw a diagram here and explain. He's saying that there is an upward move in the stock, but then, sideways choppy, and finally this can happen. But then he also says that this can also happen. There is upward movement in the stock, choppiness comes in, and a breakout happens, and the stock does this. Just imagine as a trader, you bought here, you sold here, thinking that this is a stage 3 top area, and then the stock does this. How will that feel? And I'm pretty sure that this happens with you. Because you don't have the right understanding, and the book itself is not very clear about this particular stage, stage 3. Very important. Now read this. This relative concept that I wrote on the slide. Think about it. So now let's draw the diagram for the sake of it. He says that the stock will be in uptrend momentum. This is how the stock would look like. Then what will happen is this kind of moves will start coming. See? And then, according to the conventional knowledge of stage 3, this is what will happen. So he says that stock will become volatile because if you see here, there was what? Higher lows were being formed here. And the up moves are very good. Down moves were very, very small. But what has happened here is down moves are getting much bigger compared to the upper moves. And also notice these arrows, are they not getting smaller in size? That means loss of momentum on the upside is happening. And finally, choppy, that he says, or sideways action comes. And the volumes will be there. We'll talk about that. Finally, a breakdown happens here. And then what happens? Downside momentum is covered. Then what will happen? A stage 1 will happen. Or a stage 3. Again a problem. How do you know that a stage 1 or stage 3 is happening? Unless it breaks up or the downside. And that is a problem. Because see, what could have happened, what we are calling this area stage 3, what could have happened with the stock is this also, which did not happen. Once this move came, then only you are saying it as a stage 3. Before that, you cannot take a decisive action. And this is the problem that we have to decode in this series. That how do I make? Now, I'll draw one super important diagram. But before that, just take a look at this phase, There is a slide, but I think there is a typo in that slide, which we'll see. Stage 4 is basically not the top area, it's the decline area. See, what he has written, not a lot. Eventually breaks below the bottom, which we saw. This is very important. Doesn't necessarily need such a huge increase in volume to be considered valid. And the last point is never buy stock in stage 4. So see, ये जो third point है, we will come back on this very important point in the indicators वाला series. वहाँ पे ये चीज़ खुलेगी. But now let's go back to the drawing board and let me draw a realistic diagram of what exactly happens in the market. You know. So see how the price behaves. This is how it looks. Then a breakout happens, pullback comes, then an up moves. And then finally, great deal of moves come. This is how it looks. Then what happens? This. What will you think? Well, there is definitely topping area, right? This is what happens in the market. Then you will think, okay, it will go up more. This is what the stock does. You, as just a reader of the book, would think that, okay, this is a good basing area and that is good. So one, base area. Second, you say, okay, good up move. So second, advance phase. Then, when the stock is at this point, जब आप यहाँ पर हो, in terms of time, you will say that this is what? A top area according to the book, and you will expect the price to do this. But what does the price do? It again goes into what? Stage 2, advance phase. Because of which this proves to be wrong. But this proved wrong only when this already happened. So hindsight analysis hai ye. So stage analysis suffers from hindsight analysis, just like something called as Elliott wave. And this is very important. Then finally you think कि अच्छा अभी तो advance phase है, तो you buy here, and suddenly you think what looked like advance phase is now directly gone into decline phase, 4 number, without much of a top area. 3 number तो हुआ ही नहीं, and you are bamboozled. What is happening? The book is wrong. This is what happens in the real time, in the real market. So it is very important कि आप ये सीरीज को अच्छे से देखते हैं, फोकस के साथ, और समझते हैं. Right? समझना हमको क्या है इसमें से? What are the key takeaways? Let's talk about that. First thing first, जो base area है, this is what? Volatile. Second point क्या है? Avoid trading. You have not to trade here. I'm not using the word buy or sell. Advance phase. Strong momentum on your side. Trade area. I'm not using buy or sell. I'm using trade area. Very important word. Then comes this area. Now the point is this 3 or is this 1? Who knows? Right? So this is very important. So what do I do? So see, whenever these kind of things happen, always ask yourself, are you a trader or investor? What is your goal? Right? As of now, we are understanding without indicators. अभी indicators आएंगे तो और चीज़ें clear हो जाएंगी, but just price action. If you are a trader, what you have to do is buy here, sell here, buy here, sell here, buy here, sell here, buy here, sell here, buy, sell. As an investor, what you have to do? Buy some, buy some, buy some, buy some, buy some, sell some, sell some, buy some, buy some, buy some more, sell here, have your SN, and get out. As an investor, this is what you have to do. So there is a difference. First, understand your profile. Then you can manage everything. Then what happens is, now you have read it. So what your job is to forget. 3 and 1. And remember this. Instead of 3 and 1, if something is in something that looks like 3 or 1, but as Stan Weinstein said, ये तो mirror images हैं, they all look similar. So if you see what volatility, avoid trading. This is what you have to understand as of now. When we talk about the decline, no longs. Trade on short side. Momentum is on your side. And this is important. So from Stan Weinstein का जो stage analysis है, stage 2 as a buyer समझना ज़रूरी है. Similarly, stage 4 as a seller समझना ज़रूरी है. Stage number 3 and 1 को forget. And just remember that volatility होती है. That is all you need to understand. Volatility. अगर volatility है, definitely you don't want to be there. That is all you need to take. Because see, अब हम जब अभी charts देखेंगे तो you will see that a lot of times what will look like stage 3 will turn actually into stage 1. तो अगर आप stage 3 बोलते रहेंगे तो automatically there will be a bias on the downside and you will close out your position and then the stock will move up. तो बस इतना याद रखना है कि volatility में fresh possessions ऐड नहीं करनी है हमको, fresh trading नहीं करनी है उसके अंदर, इतनी चीज़ याद रखनी है. Same goes for the stage 3. Selling का part इसमें अलग से book में है, तो I'll cover that in the series. But this is what you should do. Now let's go to the charts and see some real life examples. That is where the fun is. Now see, to start with, I'm taking a very vanilla example. Vanilla यानी एकदम bookish example, जो book में लिखा गया है, whatever has happened in the book, exactly is happening on the chart, just to get the better understanding. That is what I'm currently drawing. So see, Stan Weinstein talked about this. Let's zoom this chart a little bit and see what happened. What is this area? Stage 1, base area. Okay. What is this area? 2. What is this entire box? 3. And this is what? Decline phase, right? Okay. So everything clear on the chart happens in the market. Now let's deep dive in this and understand how will you behave here. The question comes here. After reading the book, this would have looked like what? 3, right? Because there was 2 and then there was 3. But what happened? यहाँ तक आपको लगेगा at this point कि हाँ, big red candle is coming here. Definitely, it's bad. What happened after that is a great up move. ठीक है. At this point, you will think, okay, now I think we are going up because similar thing has happened. We actually started to move over. We started to move up here and eventually came down, fall. A big fall came. So this is one doubt that you might have. When you go in the real time, things are very different. Same thing is happening again. Stage 1, 2. Now we are in who knows. Exactly. Who knows. I'll give you one more example of Zentek. Let's say this is the base area, right? Which is known as 1. Then this up move comes. 2. Then what happens is, you will say when this down move is coming here on the charts, if you see that I think now the stock is done or it is going in topping area. That is what the book has told us. Book never told you that 3 and 1 can change their places. You will sell everything, and after you sell everything, this move comes. Stock almost doubles or triples. So how do you deal with it? And this is the problem with stage analysis and the diagram given, that you try to match it. And then when you do that, These kind of things happen. So this is the point that if you have read this book, not everything is very clear and there are a lot of things you need to go through. And this is what I'm trying to do with this series. So this was a very basic series of to identify, as a buyer, as a seller, where you want to be. See, as a buyer, this is what one, volatility, avoid trading. That means buying, selling, avoid karega. Because see, what is happening is, let's say you buy here, it goes up, again comes down completely. You buy this support zone, it breaks even below that, then again comes up. So a lot of volatility. But just imagine buying here, or buying here. Now again imagine you buy here, comes down. You buy at the breakout, comes down. But just imagine buying somewhere here, good up move. So as a buyer, as a trader, where you have to be? Stage 2. That is the only place you want to be. You don't have to be in this volatile area. I'm not using the word 1 or 3, volatile area. That is what you should do. So if you have read the book, it's good that you know about 1 and 3 stages, but those are the stages that can kill you a lot or can frustrate you a lot to a great deal. So try to only use the stage 4 and stage 2. Stage 4 for what? Short selling. I'll show that those examples also. And stage 2 for what? Buying. So see here, I'll give you an example of Loris Labs. What is happening here? I'll give you one more. If you watch this chart at this point, here, what happened here? Well, 2. At this point, you will label 3. Don't lie. You will. This actually turned out to be 1, according to the book. Again, 2 happened. And then finally came what? 3, topping area. And then see what happened. Huge consolidation. Now there is one thing. What you will think is this is 1, because you will say, ye jo down move dikh raha hai yahan pe, this is 4, according to the book, and you. What you will do, you will start buying here. See what happened to the stock. 4 came in. So 3s and 1s के बारे में सिर्फ इतना जानना ज़रूरी है that these are volatile areas. As a shorter or as a buyer, you have to avoid it. That is all you need to know. And in the 4, just imagine shorting the stock. Great amount of money was here. So you cannot be buying here. Rather, you have to look for selling. Then what has happened? There is a lot of volatility again now. Just imagine somebody bought here on this breakout here. SL. Why? Because this is volatile area right now and the stock can be very volatile unless you go into a 2. That is where you need to be. So I hope the first part is interesting and you will be here with me for the rest of the series, and I'll see you in the next video.